Hi everyone, welcome to JXG Spotlight. I am Gamika De Silva, your host. Before we start the episode today, let me also tell you we've been overwhelmed with the viewership, comments, and the feedback on our previous content. So thank you very much for the following. And if you are still not subscribed to our channel, please click subscribe and put a thumbs up if you like our content. Well, this leads into a very, very interesting episode today. And I'll tell you why in a minute. And I also have a very special guest on my show today. The topic is very relevant. Just 2 days ago, NPP government presented their maiden budget. And that is something that all of us were looking forward to, especially on the background of Sri Lanka went through an economic crunch. And we went through a lot during the last 2 to 3 years. And people are with hope looking at this budget. So today's objective is to look at the budget from a perspective of consumer. What does it mean to you and me, rather than from a very technical point of view, because there are enough reports, enough discussions about the technicality of the budget. So today my guest is a very special guest, and no better person I could think of to explain this in a very simple manner. My guest today is Mr. Dimantha Mathew. He is the Chief Research and Strategy Officer for First Capital Holdings. Dimantha brings over 15 years of experience, especially in the investment banking field. He is also specialized in exposure in economics, fixed income and equity research, portfolio management, debt and equity finance strategy, project finance and corporate finance and advisory services. Dimantha also about a month back presented at the First Capital Colombo Economic Symposium about the prediction for Sri Lanka and the economy. So, Dimantha, welcome to JXG Spotlight, and the spotlight is on you today.
Thanks, Gamika. Nice to be here.
Right. To start our conversation, Dima, the budget was a very, very interesting one. And, we see it's a more infrastructure and a welfare-based budget, in my view. And the income growth is predicted. And based on IMF forecast, I think predominantly the budget proposals were in line with what IMF forecast and the IMF agreement is. There's a growth on economy of 5% growth is predicted as well. And 15% of GDP is the income that is being mentioned. And also there's a taxation. I mean, it has been broken down, especially in the First Capital report I saw, where the taxation is being implemented, etc. So this leads into our conversation. I'm going to draw your attention and your thoughts from the budget proposals as well as from the economic symposium, some of the predictions that you gave. My first question to you is, President in his budget speech mentioned about a 5% economic growth. I think that's quite significant if you look at it, and is also in line with IMF. But what does it mean for you and me, our general consumer, for all Sri Lankans? How does it impact? What does it mean to them?
So, Gamika, if you take last year, we saw again somewhere around 5% of GDP growth. However, that year, the year 2024, you could say is coming off a sort of a low base. So though you saw a lot of economic growth, it didn't really translate to the grassroots levels of the community. Now we've come a long way from there, and if you take a couple of months ago, in order to accelerate the business activity and for this growth to translate down towards the lower segments of society, we also saw sort of a rate cut that the central bank implemented now 4 months from there on. In this budget, we see a lot of social welfare spending coming in. So on one side, you see the salary hikes coming in, the pension increases. Then on the other hand, you have the increases to the Aswasuma program coming in. So you can see in that fashion, it's a lot of giveaways that are there in this budget, and that's important in a consumer's point of view. Now, if you look at where these giveaways are going, it's broadly going into the lower segments of society. Now, for example, if you take the salary hikes, if you take bulk of it is for where the government, it's for the government servants, but where the 25,000 or the 21,000 salary was moves up to around 40,000. Yeah. So like that, the pension increases that are coming in, and then even the Astrasmo program is for the lower segments also. So when you transfer funds, now you take tax income and transfer those funds into the lower segments of society. So that's what's roughly happening here. So once you do that, there'll be a lot of increased level of disposable income among this community, let's say the lower segments, lower middle segments, and this business activity overall with this new money is going to increase. Right. So what automatically happens is then there is going to be a bit more spending coming in the economy. Right. So with that, you will see that the economy that was sort of stagnant, starting to spiral again, and the business activity sort of expand in a let's say somewhat of a rapid pace because of this translation happening. So there are risks in it as well, but on the positive side of it, when that business activity expansion happens, GDP growth is also likely to expand beyond sometimes beyond the expected. So on a normal sense, we were looking at somewhere around 3 to 4% of GDP growth coming off the 5%, because we are now not in that level and we are not off a low base, and we were expecting a more stable growth outlook. Now with this, what is happening is, remember that last month we had a electricity tariff cut as well. So there's a lot of activity that was done pre-budget as well. So that also again increases this household income levels. So all that will have an impact on these consumers, and with it the spending you could see going into the second quarter, going into the third quarter, you may see somewhat of a spike in the consumption
right.
overall.
Right. Dima, two additional questions on that one. I think, maybe there could be further research in terms of the consumer confidence as well on the market, on the consumptions. In essence, what you said is this additional income will drive the economy. The economic activities will also continue to happen. In reality, this 5% growth, is it realistic if you look at it in right now? I mean, it's too fresh to say, but now, as you said, we are growing off a decent base, not like from 2023, but is it realistic?
I would say it is somewhat realistic, because we didn't expect this much of giveaways to come in. That's why we were looking at around a 3 to 4% GDP growth. So with it depends on how much this will translate into business activity, and once that translates there, how much it will spiral up. However, some risks to note there also. Every time the economy over the last 30 to 40 years, where it has, so we've artificially infused funding, and then pushed up consumption, and the economy grows beyond 4%. What has happened is there has been some amount of overheating of the economy. So that may flow on to the next year, 2026, not immediately, but this year on the consumption side, I think it will be pretty good. What it means for the common man is that, let's say, the business community, you will see the SME segment, the small businesses will see increased level of sales happening, right? Because household income gradually has moved up with all this. You will see more people buying goods and services. So that will give somewhat of a boost to the economy, especially the lower segment is where it will come into.
I'm sure this also reflects on the budget proposal. I saw it on the First Capital report as well. The goods and services tax is also predicted to grow. I think that's an impact of consumption going up.
Correct. So that is something that we anticipated. Now, if you take the government revenue is expected to go up to around 15% of GDP. So it's technically a trillion rupees.
Right.
Right.
Yeah.
And bulk of it, however, is expected to be coming off the vehicle taxes.
Right.
But there's a portion that comes off increased level of corporate taxes as well. But the natural growth in the economy is also expected to bring in a significant portion of increased revenue to the government.
Okay. Interesting, Dima. Let's move into the next question. I think if we rewind back about 4-5 years, and the discussions around the last 3 years also has been on this income tax, the APIT, etc. So I think there were proposals prior to the budget in December. There's also certain mentioning on the budgets as well, and also the indirect taxes like VAT, etc. being added. What were your reading on this, and whether we will? I mean, there was a lot of expectation on the income tax part of it. What was your reading, and what can we expect?
Yeah. So something positive that comes out of the budget is that now we are starting to see a bit of consistency over the last couple of budgets. You could say the 2024 budget that was presented earlier, and now the 2025 budget, we are seeing some level of consistency. Now, December, we saw the president announce and implement some amount of taxes, and that has been carried forward in this budget, and no new taxation was really announced.
No surprises.
Right. So which is a positive sign. What it does is it increases investor confidence.
Right.
So because now investors always look at consistency for them to be investing long term.
Right.
That's why you're seeing interest rates also not coming off a lot, because it's a confidence factor.
Builder, yeah.
So it's some amount of consistency that you need to build over time.
Sure.
Right. So with that, now here we are also seeing now the positive side of it is now the government announced that some amount of income taxes will be brought down, especially on the salaried employees.
Lower threshold?
Yeah. Yes. Yeah. So I think the 100,000 tax-free threshold moved going up to around 150,000. So again, all the other brackets will be adjusted in line of that. So again, you can see to the lower middle income segment of society, again another boost coming out of that as well. So now that is going to get implemented from the 1st of April. So from there on, with these government salary increases and the savings that you come out of this electricity tariff and the increased level of tax thresholds, all that savings will help the community to basically go in and increase the overall household income, and with that the consumer spending will start coming. So overall it will help the economy to rise from the low levels that it's there now.
Absolutely. I try to keep it not political, but one of the promises, or in the manifesto also, I think they have mentioned about VAT on certain sectors being reduced, and that will also help certain consumer segments to also spend essential areas. Have you seen this impact on the budget coming in from a VAT point of view?
Yes. So a couple of things mentioned. On one side, they've said that there is a national tariff policy that they are looking at implementing. So if you take the IMF program also, you see that the IMF complaining about the para-tariff regime that is affecting almost every level of society in terms of customs, at the customs level and even at the clearing level. So all these taxes get impacted and it gets added on for into inflation as well. And then something new that they have come up this time is VAT on digital services.
Right.
So that's something new, and with that, overall, what is likely to happen is that the digital segment of society, so where the digital companies, the digital corporates, is likely to now see VAT coming in to all
their
their
services.
to their services, to all their invoices that they raise. Depending on the thresholds, they will have to include VAT. Now what happens is we're not really sure whether we will have a problem in terms of competitiveness if when you compare internationally,
Yeah.
because most of these digital service companies may be competing
Service export level, right?
Yes,
Yeah.
exactly. So that is a problem that I see that could harm in terms of competition.
Right. Actually, I'm going to jump a question because you mentioned about the digital services. Also, government policy is also for digital economy, digital infrastructure growth, and all that. Now, there's a VAT component being added. Do you think that, even in terms of the exporter services also, do you think that this will be a burden on the digital strategy for the government, or how do you see this?
Not really. I think on one side, they're trying to bring a bit of consistency. For example, if you have VAT, you have VAT across the board to everyone for all corporates.
Right.
So that's also something of an improvement that we need to recognize, though it is somewhat of a burden. Now you have, so VAT is then there for all types of goods and services. That's why you see an increase in the budget also, that they've included expectations of tax revenue.
Right.
Right. So that consistency is something that is important, and also it somewhat improves the ease of doing business, because for let's say a foreigner's mindset or even a local investor's mindset, this amount of taxes are there, and it applies to all industries across the board. It makes it so much easier when there is a lot of policy
more clarity and consistency there.
Yes.
But as you said, I think one of the challenges would be on the service export side of it, the competitiveness and the global arena.
Yes. However, if you asked the question on the digital ID and the expansion of the
digital
government infrastructure. Now, on that side, I think it's a real big positive for the government, because now this digital ID is something that was proposed, I think, in the 2010 budget.
That's right.
But over the years, we've not really implemented. So now this time again it comes in the budget, and we are yet to see whether it will get actually implemented. But if it does, there's significant benefits for the government, even in terms of taxation.
Yeah. You can triangulate and capture your tax net will also.
Exactly. You can link up all the government institutions. Now, that is what is happening in other countries.
Right.
Now, if India can implement it for 1 billion people, I don't see any problem. Sri Lanka with just 20 million people.
Absolutely.
It should be so much easier.
I mean, if you look at the touch points of your credit card, the bank, your crib, RMV, all that triangulating from one unified ID, I'm sure that the data will be available.
Exactly, and also it might reduce the overall cost of the economy as well, moving into digital transactions. For example, there are lots of economies globally, when they're coming out of crisis, these kind of productivity improvements have been done on the government side. So if you take countries like Argentina, Ghana, Greece, a lot of these things have done, and one of the key things I remember that they've done is basically some on the energy front improvements in terms of pricing, and the other is on the transportation segment.
Okay.
Because a lot of these countries have government services where the transportation sector is there.
Right.
Now, if you can push towards the digital transaction side on the transportation, you might improve
more efficiency and
productivity improvements.
Absolutely.
Now, when you have that productivity improvements coming in, now that's something new to the economy, and
That's
that
right.
will add onto that GDP growth as well.
Superb.
Plus, government revenue
will increase on the other side. Yeah.
Yes, revenue will increase.
Superb. Thank you for that explanation. I think, one of the facts that I remember, I can't remember exact numbers, but going cashless on one side, on digital payments, etc. I remember CBSL at one project, I remember the printing and delivery and logistics of cash printing and all that is a huge cost for the government. So probably these digital payments also will ease off that burden and productivity increase as well.
Yes, and also I'll mention another fact. Now, if you take this Sri Lanka's economy, you could say a good portion of the economy operates on cash. Right, and then that is a problem in terms of taxation as well, when large amounts of cash are used for transactions. So moving into a digital sphere basically formalizes all these avenues and improves on tax collection as well.
Fantastic. Thank you, Dima, for that explanation. The next question is also, I think, I'm catching 2 points. One is in December, the government announced saying the withholding tax change. Also on the budget proposal, I saw the capital gains tax and also equities remaining free, tax-free. So this question is more tilted towards your industry from First Capital point of view and on from investment banking and capital markets point of view. How does this impact to the industry, and what is your message to the consumer there?
Yeah. So on the withholding tax front, I think the announcement that was the 5% withholding tax will be increased to 10%. So that's for the fixed income who investors who invest in fixed income. So that's going to be a cost to them. So now if you take current interest rates, it's around 9%, and so despite you being basically on the whatever band of taxes, you will get that deducted upfront.
Okay.
So that's somewhat of a disadvantage for the investors, and especially for the investors that are in the lower tax bracket and probably salaried. If that is the case, both of your incomes are basically deducted up front. So you have no real chance of claiming that back. So now that is, of course, is a disadvantage. Then if you move into the other taxation, the capital gains tax is twofold. On one side, on fixed income, also you have capital gains tax in terms of government securities where you buy and sell, and that capital gains tax rate has been increased from 10 to 15%.
Right.
So that's sort of bad news for the investors who
large scale investors
who trade. So that extra burden of taxation will come in.
Right.
Then, however, if you take the equity investors, I think there's lots of people who are retail investors on this front, because there's a large community here. There, the taxation still remains zero in terms of capital gains tax. However, in terms of dividends, of course, the normal withholding tax will apply, and that is 15%. So that will be there, and there is a advantage for this set of investors, especially if you take a year like 2025, because we have a lower interest rate regime here now. And we don't think with the level of liquidity or excess money in the market that it will move up significantly.
Okay.
Right? Even with the consumer demand that comes in, it may not move up too much. So, which means alternative investment products other than fixed income might be a bit more attractive. That's where stock market or equity investments come into play, where equity investments will be more attractive. Why it will be more attractive? Because one, it's an alternative investment option, and secondly, for corporates, they will have lower finance costs because of lower income, and also, as I said, over the year we will see increased level of business activity,
Right.
where they will do a higher level of profitability, and with it again the higher profits will carry higher value for the companies.
Right.
So that will benefit the equity investors positively. So this might be a good year to move into equity investments because you benefit on that side, plus it's a tax-free regime where you have capital gains is tax-free.
Tax-free. I think it's an interesting phenomena, Dima, if you look at it. I mean, this also gives the consumer the confidence and the awareness that your withholding tax increased on the fixed income point of view, but this will also allow them to understand and explore opportunities on the other asset classes. I think, if for our followers, if you have not watched our first episode where Dilshan speaks about the asset classes, I think this is an area that you can learn, experiment, and grow your value as well, right?
Yes, exactly.
Okay. So I think you mentioned about the lending and deposit rates as well. So you predict it to be at a lower regime throughout the year, as predicted at economic symposium also.
Yeah.
One of the interesting points is the vehicle importation. I think the government has also projected the larger tax component coming into revenue. I mean, Sri Lanka, our consumers have been deprived in terms of getting new vehicles for a couple of years now. There's much more expectation. But of course, like the initial advertising and the communications, the vehicle prices are very, very high with the taxes coming in. We do completely understand from an economic point of view about the demand and supply and the equilibrium being maintained. But how are you looking at this? I mean, whether the government will be able to achieve the set targets, what could the consumers expect, and how long do you think that this high price regime on the vehicle with regard to taxation will remain?
Yeah. So on one side, the government is expecting a large amount of revenue, increased revenue, government revenue coming off the vehicle taxes, and on the other side, you have high taxes coming on to that front of vehicles where there is somewhat of a affordability issue. That is correct. However, remember that this is a free market economy, and if the vehicle prices of, let's say, for example, the most popular destination, Japan, coming from Japan is expensive, and there is a massive gap created in terms of pricing in the market, I believe that it will automatically get filled with other vehicles coming into the market. You could import vehicles from other areas, lower priced vehicles.
All right.
So it might take a bit of time, obviously, for the importers to shift from one destination to the other to identify these gaps. Of course, over the next 2 to 3 months, immediately it might not get adjusted. Sure. But as the year flows, as the investors or the importers basically identify these gaps and find out alternatives, basically I think all these gaps are likely to get filled.
Okay.
Right? That's natural that is going to happen. So with that, I think with all the gaps filling, you will have vehicles available at different levels. I mean, another way of solving the gaps issue is the importers might reduce their margins that they are keeping
Off
as
the
well, because now you can't keep a vehicle for more than 3 months
yeah.
as well. So it'll come on order. So somewhat of a, if you look at it, somewhat of a lower cost for the importer as well, because you'll be bringing it on
a
order.
pre-order, yeah.
Yes. So then probably you might be able to lower your margins and give it
the
as
cash
well.
flow is also fine. Yeah.
Exactly.
Yeah.
So then that is also another way that that gap might get filled. So
Okay.
I don't think there will be a problem in that sense. So I think all these gaps will get filled, and with that the vehicle demand is likely to get met. But remember, again, I will emphasize this. Now with this consumer demand rising, there might be a major push in consumer demand. So that could have an impact on the currency on one side. Remember, we are still a import dependent country.
Yeah.
So which means higher imports, it may have an impact
Pressure on the
pressure
rupee,
on the rupee. Now last year you saw lower imports,
Yeah.
again had pressure on the rupee for it to appreciate.
Oh, yeah.
Now it will be the other way around, where it could actually depreciate, and so that's why it's a natural hedge.
Okay.
If you have higher imports coming in, rupee will depreciate and your vehicle prices will increase, then naturally there'll be a lower amount of imports coming in the future.
Sure.
So overall, if you take for this year, I don't think there will be a problem in terms of the government tax targets getting met, because there's a lot of pent up demand as well. So over the year, I think it will get
resolved.
Right.
Very interesting take on that, Dima. Moving into my next question, I saw at the Economic Symposium your predictions over the years and last year on the inflation. I think that's something that most of the market got to know during the last year, what is inflation and how it impacts and all that. So does your inflation predictions that you made at the Economic Symposium remain same, or does the budget has any impact on that? What's your take on that?
So in terms of the budget, of course, we've broadly expected this demand push to come into play, and we've incorporated those expectations into our inflation. However, something that we did not expect was the electricity tariff cut, which we partly did expect, but the size of the tariff cut was quite significant.
Right.
So with that, I think what happens is we are in a deflationary environment where we have, which means it's negative inflation, right? So year on year, your prices are slightly lower. Right.
Okay.
So which is again positive, where the household income again will naturally expand. So what we feel is that negative inflation might last a bit longer than what we
predicted,
forecasted in the forum. So now what we expect is, at least during the first half of the year, I think that's what was announced by the central bank also in terms of their expectations. So first half of the year, we think there could be negative inflation coming into play, but beyond that, it will fast move to zero, and inflation will come in, or is likely to come in, simply because now we are expecting this massive push in consumer demand. So consumer demand upward spiral sometimes also creates excessive demand, and with it some amount of inflation also might come in. Okay. But since we have a floated rupee, things might get settled down. But I think there could be some amount of inflation, especially towards the last quarter of this year.
Right.
Remember, last quarter of 2024 also you had negative inflation. So you're coming off again a low base also.
And then,
So you might have a slightly 5% or slightly above 5% inflation, but nothing too much to really worried about, since it's a base effect factor. We are not too worried about it, and we don't think it's a significant thing for the central bank or the government to worry about, since it's coming off a low base.
Low base.
And it'll get adjusted towards the first quarter of next year.
Sure. Yeah. Thank you, Dima, for that explanation. I think very, very important message to the consumer market as well. My next question is about small and medium enterprises, MSMEs. I think in an economy, that's a backbone. I mean, especially in Sri Lanka, we have seen startups and, enterprises, small and medium enterprises doing well. Do you see any encouraging factors from the budget to the SME sector, and also any areas that you see as sectors which are predicted to grow?
Yes. So if you take the SME sector, I think the biggest advantage that they have is this year is going to be a year for the consumer. So as the economy accelerates and translates into this type of economy, you will see these SME companies thrive. I think over the last 3-4 years, most of the SMEs either went bankrupt or basically had a lot of issues surviving. So now I think that wait is probably over. You're looking at business growth now.
Right.
So I think the lowest MSME segment and the SME segment. MSME means the micro level, and the small medium enterprises, I think, will have a significant support coming from the economic growth itself. Right. In addition to that, there is a proposal to bring about a development bank.
Yes.
So with the support of the state banks and the other banks, that's going to likely to get implemented.
So it's within the banking system that is
within the banking system. However, what the problem they might also face is whether you can provide low cost funding to these entities. However, it will push the Sri Lankan banking systems to look at more project-based loans, cash flow-based loans, because currently we are in a risk-averse environment where most banks take assets as collateral and provide loans.
Yeah.
So that will really not work for the MSME and the SME segments, because a lot of these segments may not have
collateral to give. I think that's one of the biggest bottlenecks that the SME sector will have.
Yes.
And if this budget and the policies can support, I think that's a growth engine for Sri Lanka.
Yes, and that's one of the primary reasons they try to move towards the micro lending area, which is at very high rate, interest rates. So that is, I think, the biggest problem. So this might somewhat solve the issue if it is put right.
Okay. Dima, also on the similar lines, I think you predicted some of the industries which has growth projections. This is more from an investment point of view as well as from the enterprise point of view. What are the, if you to re-emphasize in terms of the industries and the sectors which are poised for growth?
Yeah. So this year we feel that tourist arrivals are likely to go into an all-time high. I think even January we already saw an all-time high January tourist arrival figure.
So it's projected about 2.5, 2.8 or even 3, right?
We are looking at 2.5 arrivals, 2.5 million plus arrivals for this year. Also, I think there is the airport is being expanded to accommodate more tourists. So this is a key area that we think will have sizable growth, and
all related industries around tourism.
Correct. And the second area is the consumer segment. Right. So consumer segment is expected to significantly grow, not only with the economic growth, but also supported by this tourist arrivals increase also coming into play.
Right, okay.
So you have a double effect coming into play.
Right.
And so I think all segments of retail will benefit by it. Not only, I mean, last year what we mostly saw is probably the branded retail segment starting to revive, but then now with the lower segments also likely to have more funds in hand. I think there'll be more activity coming into play, and those are the two key areas that we see. And in addition to that, something important to sort of look at is the export companies.
Right.
Now, global economy is also looking at revival. I think we saw a few rate cuts come in last year on a global sense, and also if you take the new US administration, they are looking at sort of lower funding towards the wars coming in, and also with that I think, or the lower level of escalations globally.
Yeah.
Now, that will also help for the global economy to sort of grow. And with it, we feel that we are already seeing some signs with some of the export companies reporting higher level of earnings during the December quarter, which was just released this week.
Right.
So we see that the global economy is the growth is starting to help the Sri Lankan exporters.
All right, okay.
So that's also something where you should have a eye on to. And also finally, as usual, the financial services segment. Sri Lanka, the financial services segment is a huge segment, and that segment, banks to NBFI sectors, NBFI especially because the vehicle market gets released. So both these segments are likely to perform very well and grow.
Dima, also on the backdrop of lower interest regime, encouraging towards housing loans, etc., construction can also have an impact?
Correct. Sorry, Gamika, I forgot to mention that factor. So if you take the triangle of needs, so you have the food beverage segment that has already started to revive, and then you have the next segments coming in where people will look for white goods sort of areas. Then you have the vehicle markets getting opened up, then people will look at that. And finally, towards the second quarter of this year, we are looking at the construction segment starting to revive. We are already seeing some level of revivals happening, especially because of the tourism industry, where you have a lot of resorts getting refurbished and all that. So now with the lower rates of housing, we are starting to see people take loans to sort of repaint their house, sort of do into new constructions and so on. So we think construction sector revival has already started. And noticeable growth is likely to come from the second quarter onwards.
Okay.
Right? And with that, we will see that segment also rise pretty quickly. So construction sector is a key area to look out. And also remember, construction has been about 10% of the GDP. So construction sector itself reviving will have a significant impact on the economy.
Sure.
That's why the government also has allocated about 1.3 trillion rupees this year. That's about 61% higher than the amount that they spent last year. So it's not only a social spending budget, where they are also allocating money into infrastructure development to start off some of the halted projects. And so this is probably the first year that we have some money and probably funds coming from the bilaterals and probably agencies such as JICA,
Right.
where you can restart the
the projects to move forward. Yeah?
Exactly.
Okay. Interesting. Dima, just for clarification now, usually the budgets are presented in November. Now, suddenly we have a budget in February being presented. So this budget is up to December, the government
Yeah, so
proposal?
it's a full year budget.
budget.
Now, what we saw some amount of a presentation coming in November as well. That is only for 3 to 4 months. I think 3 months. I think, and this includes that as well.
Right,
so this is for the full
for
year.
the full cycle. Okay, right. Moving into a more of a global question, we see a lot of changes in the global economy happening, especially with the USA changing policies in terms of their stance about global. We see the powerhouses of India, China in that game. We see Middle Eastern crisis in terms of war happening. Sri Lanka predominantly being in import and export, and also we are in a key hub. How do you see this geopolitical economy changing over in the globe? You mentioned this on the export side of it. What is that impact that you see for us?
Yeah, so on our side, I think on Sri Lanka's side, there are two positives that are happening right now. Now, on one side, global economy growth has been upgraded by all the agencies, all the international agencies on the expectation, because now we have lower interest rates on a global front, and US has sort of stopped their rate hikes and gone into rate cuts. So has Europe and the rest of the world. Now with that, you will see as the months fold in, that converting into higher growth. Also, with global escalations sort of reducing this year, especially on the Middle Eastern front and most probably on the Ukraine front, with that will also actually help growths to revive.
Okay.
Right? And on top of that, we have a global powerhouse next to us, which is India. Now, India is one of the markets that are having the highest growth rates in the world. And looking at the size of it and our proximity to it, there is a natural overflow of that growth that we as Sri Lanka can grab. Right? So that's, I think, where Sri Lanka needs to look at.
Need to capitalize on that.
Just to give you a small example, if you take southern India, is increasingly starting to become an auto manufacturing hub globally, right? And if you look at this budget, now there is some amount of tendency towards that, where they are looking at expanding the automobile manufacturing market, and they've identified that, which is somewhat of a good sign. Now we've already started in a small scale assembling some of the vehicles, but there's a lot more potential. Sri Lanka has not really moved into the global value chain of manufacturing things. Obviously, a single product gets manufactured in 30, 40, 50 countries, and we are really not in that value chain.
Right.
So I think starting this operation is one thing, but I think the increased focus has to be on probably improving the ease of doing business, which will basically encourage, you could say, more Indians, if you take for that fact, if India is growing, to come into Sri Lanka and start manufacturing and then supplying to India. We have a huge benefit because we have a already existing free trade agreement ongoing.
Right? So might as well utilize that and
exactly. So a lot of people, manufacturers, are already utilizing this and supplying to India, and a lot of businesses are doing that. But I think there is a lot more potential considering the size of growth that India is looking at. It's like China growing 30 years ago, that level of growth is what we are seeing in India.
Very interesting. Dima, time flew. I think the topic was very interesting, and picking your brain was like really interesting to me. Let me conclude with one final question to put you on the spot and a bowler bouncer. If you were the finance minister of Sri Lanka, looking at this budget, would you change anything?
That's a trick question, I think. So let me put it in this way. I think yes, the government is trying to do a lot of things by increasing spending on the social aspect, right? So a lot of social spending coming in, and then that moving into consumer spending. I feel that we are sort of going on the same line, similar to some of the past regimes, where we are providing more funds for people to spend, which will invariably go into consumer spending.
Right.
I think in terms of sustainable growth, what we need is more investments going into manufacturing, which will generate more jobs, and with it basically economic growth moving up, that will translate into sustainable growth. Now this sort of social spending led growth really might not last for long.
It's a short-term strategy, right?
Short-term strategy. Plus, there is always the chance of consumers going overboard and spending above the thresholds, and so overall economy is slightly heating up. Now it will naturally adjust because we have a floated currency, and the currency will depreciate and all that. However, I think government's higher focus should be, as I earlier said, to improve the business conditions in Sri Lanka, basically the factors of production. So improving the way people do businesses, probably reduce the level of approvals that is required,
take off the red tape on some of the areas.
Yes, exactly. On the customs front, maybe on the land front. I heard that the government themselves say that someone to set up a business, you need to put in about 80 approvals or something.
That's what I heard.
Yeah, so I think cutting off some of these things are what we really need to work on for sustainable growth, and also to have that edge where the growth in India, to take advantage of the growth happening just next to us, few kilometers away. Right? So that's where I think I would like to put a bit more focus on. Probably might not be required to be in the budget itself, but I think the concentration has to be there.
Very interesting. Thank you, Dima. I think, as I mentioned, the time flew without us even knowing. Thank you very much for taking time off. I know the past few days have been really busy for you, catching you here, because it was timely topic I wanted to bring you in. So thank you very much for accepting our invitation and being here.
Thanks, Gamika, for inviting.
Well, folks, that concludes our spotlight today. Sri Lanka has gone through a lot during the last 3 to 4 years. We as Sri Lankans know how valuable our country is, what a resourceful country we are in, and we Sri Lankans deserve the best. And we hope that this budget and consistent policies will develop our country to the next level, and we as Sri Lankans can benefit and be proud. And with that, let me conclude. Stay focused. Remember, stronger together, stronger than ever.